Welcome back to ProfitPowerhouse, your home for real-world financial intelligence. Today, we're diving deep into the surge in gold prices, why it's happening, what it means, and how you can strategically position yourself during this pivotal time in market history. We've entered a moment where traditional investments like tech, crypto, and S&P 500 darlings may not provide the same safety or gains they once did. So why is gold outperforming everything else right now? Let's go step by step.
Gold is soaring. On May 6, 2025, it hit a record high of $3,400 per ounce. This continues a remarkable rally. Just weeks ago, gold breached the $3,400 mark for the first time. The current price represents a significant gain of nearly 30% since the beginning of the year. Investors are clearly flocking to gold. They are seeking safety in uncertain times. This surge is not just about speculation, it reflects deep-seated anxieties about the global economy. There are multiple factors at play. These factors are driving investors towards tangible assets. Gold is seen as a safe haven asset. Geopolitical instability is a major driver of the gold rush. Tensions between the United States and China continue to escalate. This trade war creates uncertainty in the global market. Investors flee to safety when uncertainty rises. Gold is a traditional safe haven. Adding to the anxiety are concerns about the Federal Reserve. Its independence is being questioned. Political pressure on Jerome Powell is intense. This pressure undermines confidence in the US dollar. A weak dollar makes gold more attractive to international investors. Central banks are also buying gold at record levels. This buying spree further constrains supply. China's central bank has been particularly active. It has increased its gold reserves for 5 consecutive months. This trend signals a lack of confidence in fiat currencies. Gold has always been a cyclical asset. It experiences periods of boom and bust. After reaching a peak in 2011, gold suffered a major correction. It endured a painful bear market, plummeting by 40% to around $1,000 in 2016. However, since then, gold has been on a steady upward trajectory. It has been in a decade-long recovery phase. The current price action is significant. Gold has broken out of its previous trading range. This breakout suggests a potential for further gains. Analysts point to a parabolic move, signaling strong upward momentum. However, such rapid ascents are often accompanied by volatility. Section 4. This time it's different. While gold has rallied in the past, this time feels different. Previous rallies were primarily driven by inflation. Today the picture is more complex. We are witnessing a confluence of factors. These factors create a perfect storm for gold. Geopolitical tensions are higher than they have been in decades. The US-China rivalry is intensifying. Trust in the global financial system is eroding. The Federal Reserve's credibility is under scrutiny. Central banks are accumulating gold at an unprecedented rate. This combination of factors is unprecedented. It is fueling a flight to safety. Gold is benefiting from this flight to safety. Investors are looking for assets that are tangible and enduring. Gold fits the bill perfectly. Section 5. The silver lining. While gold shines brightly, silver is also attracting attention. The gold-to-silver ratio, a key indicator, has surged past 100 to 1. Historically, such extreme levels have preceded sharp rebounds in silver prices. This suggests that silver is currently undervalued relative to gold. Analysts believe that silver is poised for a significant move upward. They see intermediate-term price targets between $38 and $50 per ounce. This presents a compelling investment opportunity. Investors seeking to diversify their portfolios may want to consider silver. It offers the potential for significant upside, especially in light of gold's remarkable run. Mining stocks offer a unique way to profit from rising metal prices. These companies extract and sell raw materials like gold, silver, and copper. When commodity prices increase, mining profits often surge even higher. This leverage effect is what makes mining stocks so appealing to investors during bull markets. However, mining is a cyclical industry. Prices fluctuate, and companies face operational risks. It's crucial to understand these dynamics before investing in mining stocks. Careful research and risk management are essential for success in this sector. 2025 presents a compelling case for mining stocks. Major ETFs like GDX and GDXJ track the performance of leading mining companies. Interestingly, only one gold miner, Newmont, is included in the S&P 500 index. This suggests that mining stocks are currently undervalued and underowned by institutional investors. Furthermore, mining stocks are relatively cheap compared to the price of gold itself. This mispricing creates a potential opportunity for savvy investors. If you believe that gold and silver prices are headed higher, then mining stocks could offer significant upside potential. While many investors chase trendy assets like AI stocks or cryptocurrencies, contrarians look for undervalued opportunities. Central banks worldwide are quietly increasing their gold reserves, signaling a lack of confidence in traditional financial systems. This trend, however, remains largely unnoticed by retail investors. Now is the time to act. Educate yourself about the potential of precious metals and mining stocks. Reassess your portfolio allocation. A balanced approach might include physical gold, some silver, and a small stake in mining companies, around 10% or less of your total portfolio. The world is on the brink of significant financial changes. Trust in institutions is declining. We are witnessing paradigm shifts in the global economy. Gold and silver have historically served as safe haven assets during times of uncertainty. The US dollar, the world's reserve currency, is weakening. The Federal Reserve faces mounting pressure to inflate its way out of debt. These factors contribute to a bullish outlook for gold and silver. Mining stocks, with their leveraged exposure to these metals, stand to benefit significantly. Remember to manage your risk using tools like covered calls or stop-loss orders. This will help protect your capital while allowing you to participate in potential